Right now, it feels like everyone is talking about artificial intelligence. It's supposed to completely reshape our world, our jobs, the entire global economy. But, behind all that excitement, there's this familiar echo, a pattern of hype and wild speculation that has cost investors billions, even trillions in the past. So that's what we're going to unpack today. Is AI a genuine revolution, or are we staring down the barrel of the next great bubble?
To really get what's happening today, you have to rewind the clock. Back at the turn of the millennium, the dot-com dream just imploded. The core idea that the internet would change everything, it was absolutely right. But the valuations of the companies building it, they were just spectacularly wrong. And the financial carnage that followed was immense.
And that's the big question today, isn't it? As money floods into AI at a rate we've frankly never seen before, are we seeing a real fundamental shift that justifies these eye-watering prices? Or are we just pumping up the next trillion-dollar bubble, doomed to repeat history? All right, so first, let's make the case for revolution. The people on this side of the argument believe this isn't just hype. No, they see it as a fundamental change in our economic engine, something on the scale of the steam engine or the internet itself. You see, for decades, AI was mostly locked away in research labs. And then, OpenAI let ChatGPT out into the world. All of a sudden, millions of us had this incredibly powerful tool right at our fingertips. The whole world saw what it could do. And that was the spark that lit this absolute investment firestorm. And look, this isn't just some far-off theory. AI is already creating real, tangible economic value right now. It's handling customer service calls, it's slashing years, literally years, off the timeline for discovering new drugs, and it's making software developers way more productive. We're not talking about niche apps here. This is hitting the very core of major global industries. So here's the bottom line. The argument is that we're on the verge of a massive productivity boom that could ripple across the entire economy. I mean, think about it. If AI can make every single knowledge worker faster, smarter, and more effective, the economic gains could be absolutely staggering. And maybe, just maybe, that justifies the colossal investments we're seeing. Okay, to really grasp the sheer scale of this boom, you have to look at the one company that's supplying the essential gear. It's just like the old gold rush, right? The people who really got rich weren't the miners, but the ones selling the picks and shovels. Well, one company is selling the digital picks and shovels for this entire revolution. And that company is Nvidia. They design these incredibly powerful computer chips called GPUs that are absolutely non-negotiable for building and running large-scale AI. Let's be clear, without Nvidia's hardware, the AI boom as we know it today simply would not exist. And the market's reaction? It has been mind-blowing. In just a few years, Nvidia's value has shot up into the trillions, making it one of the most valuable companies on the entire planet. Its stock price has basically become a live referendum on the world's belief in the future of AI. But that kind of explosive growth is also a massive red flag. For a lot of people, it flashes the classic signs of a financial bubble. So now let's shift gears and look at the other side of the coin, the one that's rooted in centuries of market history and painful lessons. Shiny new technologies often follow this very predictable pattern. First, you get the amazing innovation. Then comes the hype and the speculation, which drives prices to levels that just aren't sustainable. Eventually, reality bites. The profits don't match the wild dreams, and the market corrects, often brutally. The big question is, where exactly is AI on this cycle right now? And this pattern is so clear because we have seen this movie over and over again. Railroads in the 19th century, telecom, the internet in the 90s, even crypto more recently. Every single one of them was a revolutionary technology, and every single one created a massive speculative bubble that eventually burst and wiped out fortunes. And this really gets to the core of the problem. On one hand, the market is pricing these companies as if enormous future profits are a dead certainty. But the reality on the ground, a lot of these AI startups are burning through cash like crazy, still trying to figure out how to build a profitable, sustainable business model. And here's why that profitability is so hard to find. Building this stuff is just astonishingly expensive. You need unbelievable amounts of computing power, which uses enormous amounts of energy, and you need massive sets of data. I mean, to train a single top-tier AI model can cost over $100 million. That means only a handful of giant companies can even afford to play the game at the highest level. And what's throwing gasoline on this speculative fire? Geopolitics. You have this intense competition between nations, especially the US and China, to dominate this technology. It's become a strategic arms race, and that's driving a flood of government and private money into the sector, pushing valuations even higher. Okay, so let's play this out. What happens if this really is a bubble and that bubble bursts? What does the aftermath actually look like for investors, for companies, and for the global economy? Well, the financial fallout could be pretty severe. You could see a massive correction in tech stocks, trillions of dollars in wealth just vanishing from people's portfolios, and a wave of bankruptcies for all those startups that rely on a constant drip of venture capital to survive. But, and this is probably the most important lesson from all of this, a financial bubble bursting does not mean the technology itself is a failure. The speculation is one thing. The actual innovation is something else entirely. The dot-com crash is the perfect case study. Remember Pets.com? These flimsy companies built on hype just disappeared overnight. But the underlying technology, the internet, it didn't go anywhere. In fact, it went on to change the world. And from that wreckage, giants like Amazon and Google rose up. And it's very, very likely we're going to see the same pattern play out with AI. If there's a market correction, it'll probably wipe out the companies that are just running on hype. But the truly innovative firms, the ones with real business models, they'll survive. And the technology itself will just keep getting deeper and deeper into our economy. So where does all this leave us? Well, it looks like two things can be true at the same time. The technological potential of AI is, without a doubt, revolutionary. But the financial market's behavior around it? It has all the classic telltale signs of a speculative bubble. Which really brings us to the final crucial question. It isn't, is AI a revolution or a bubble? The technology is real and it's here to stay. The much more important question for all of us is this. On the long road to that revolution, who is going to be left paying the price for all the hype?